Thank you.
So there's a stoicism, I would say, in production. And to that end, we've had some of big oil in Europe report, and it's all gone quite well. Translate this momentum higher in the oil market for you on the equity side.
Sure. So in many respects, we've already seen this play out already this year. We've seen very strong performance in equity markets for the oil exporter countries in places like the GCC, as far as Colombia, Kazakhstan, Russia. On the reverse side, we've seen weak performance in Asian markets, which are mainly full of oil importers. The really interesting anomalies here are, I would point to two countries, Oman and Nigeria.
Right.
Two countries that should be really sensitive to a much higher oil price, and they haven't reacted at all. They're 20 to 30% cheap relative to their 5-year history. They are enjoying higher fiscal revenues. They are generally unloved by international investors. And those would be the two that I would say have really not caught up with this sort of oil-led rally.
In the rally, there's also the issue about fiscal break-evens. We popped this into the GTV library. This is the UAE and the Kingdom of Saudi Arabia. And the IMF had a report just the other day that Saudi actually needs $85 probably. But these break-evens, I mean, they're still above where we are at the moment. From a market point of view, are you disconcerted in any way by this? Are we being overly effusive on Saudi, or should we be more cautious on this?
So there are a couple of things. One is that these high fiscal break-evens demonstrate that there's still a need to reform. There's still a need to drive fiscal revenues, government revenues higher. There's still a need to drive diversification away from the oil industry. The second thing is, in this environment where bond investors are so generous and it is so easy for these sovereigns to issue increasing amounts of debt, there isn't the urgency necessarily to deal with these high fiscal break-evens in the next year or two. And then the third aspect is obviously there's a political dimension. There is still a need to bring on board and take on board the mass population in these countries, the citizen population, in this gradual reform process and transformation process. So bottom line, yes, higher oil revenues help these countries. It also doesn't need to be as high as fiscal break-even in the immediate term.
Okay, let's dig a little bit deeper. I spent a lot of time on Saudi banks this week, so let's look for something different. We've got a lovely chart of a holding company, Seera. This is Altair, the tourist company, the travel company. And you draw the comparison between, we've got the Careem Uber deal, but this stock has not repriced, but they have a very serious vested interest in Careem Uber.
Absolutely. I mean, Altair is a domestic travel play. So whether it's international arrivals for Hajj and Umrah, or whether it's the growth in Saudi domestic tourist traffic, those are the core drivers of their main business. However, they do have a venture capital business which has a significant stake in Careem. That has been enjoyed a crystallized valuation as a result of the Uber acquisition, and there's really been very little response in the share price of what's now known as Seera. So that would be one of those stocks that, in a market that's really been driven more than anything by MSCI-related index flows and FTSE emerging market index-related index flows, this is one stock that's been left behind. It's relatively liquid, it's very easily accessible, and is offering a very interesting valuation after that deal.
Okay, that's a nice call coming through on that, and perhaps unrealized value from a market perspective. Can we pivot to Turkey? Because we've seen the lira. Let's have a look at the lira. It absolutely took a pace. This is about communication or bad communication, whatever way you want to look at it. Goldman Sachs say this currency could drop another 15% in the next 12 months. I want to translate this level of volatility into the equity story, because where does this perhaps show itself on the downside, and what are the opportunities as a result of this kind of volatility?
Sure. Well, the first thing is, let's bear in mind, for all of the criticism that Turkey attracts for poor communication and what you would call non-orthodox economic policy, there's a mirror image of Turkey across the world, which is Argentina, doing everything that international investors would want it to do, obeying the commandments of the IMF. It's in the middle of an IMF loan, but suffering exactly the same, in exactly the same manner when it comes to FX volatility. So it's not a unique Turkish problem. Now, when it comes to Turkish equities,
yes,
when you see this sort of devaluation, what does that mean? It means it's a better environment for exporters. It means it's a tougher environment for disposable income and consumption plays. And again, it layers on another level of risk for banks dealing with potential non-performing loans, particularly for those customers of theirs who have heavy dollar borrowings.